This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, July 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn down to at 397.25. August soybeans are down 4.5 at 1004.5. And September Chicago wheat was up 5.5 at 552.5. This morning we had an export sales announcement from the USDA, 110,000 metric tons of corn to unknown destinations for 25. Also released this morning, weekly export sales, real solid week for corn. Almost 1.3 million for old crop. Upper end of the range was looking for 900,000. We had 888,600 for new crop, which was well above the top end of the estimates there. So a real solid week for corn. It's a good sign there. Soybeans, 503,000 on the old crop, which was solid. 248,400 for new crop, which was pretty much middle of the range for what the trade was looking for. Wheat side, good week for wheat. 567,800. Upper end of the range was looking for 600. Meal, 207,700 on the old crop, right in the middle, and 370,800 for new crop, also in line with estimates. And on the oil side, 4,000 for old crop, nothing on the new crop. Both numbers were as expected. Good morning, fellas. Brian, you're back. Don't ever leave again. It was. It hasn't been that pleasant here lately, but welcome back to the War Room. We're going to have a USDA report out tomorrow, so I know we'll touch a little bit on that here today. Also, I mean, you got basically a system going through Iowa here this morning that spans from the northern border to the southern border, and the market is certainly paying attention there. So Iowa with 86% good to excellent is getting more water. And I think that, that's just where we sit right now. Also, late yesterday, 50% tariffs going to be slapped on Brazil. Real was tumbling down about 4% in a couple of sessions here. So that's a little bit of a headwind as well for our markets. So Dustin, I guess with what we know how things have panned out here in the last 24 hours, maybe give us some thoughts, and then we'll throw around the room.
Yeah, so Brazil, obviously the tariffs announcement on Brazil is probably one headwind that we have to consider today. The Brazilian real was down substantially overnight. It's come off this low quite a bit, but I think we're still looking at, favorable weather. And as long as that's happening, I think there's a big consensus out there that even if we do get some deals done, a very large yield is going to keep us down. I don't necessarily disagree with that. I mean, depending on where the yield comes in at, I would say we still have to finish out pretty well. It's July 10th. We do have the potential for a big record crop. And I'd say it looks like that's the likely path we're heading down. But last couple of years, we've finished off dry, and I think that's taken off a lot of those top end yields when we get to the finish line. So when you look at the starting balance sheets, sub 2 billion bushel corn carryout, we had to ration some of the bean demand to get to a sub 300 million bushel bean demand still, or bean carryout still. I still think there's reason to kind of see where things play out here, especially with the increased coverage that we're getting through Farm Bill, and just consider where you are. Where you are on that matrix of possibilities, including insurance and Farm Bill alone, let alone what some market facilitation payments might end up being if we do see very low prices because of trade war. I still think that that's a possibility, just based on what Brooke Rollins said back in March, April, that they may use that program again if necessary. So, other than that, it's hard to disagree with good weather bringing markets down right now. That makes sense given the news with Japan last week here.
Got your eye on anything big for tomorrow? I know we're gonna get a WASDE update at 11 o'clock Central tomorrow, but anything you're focused on there?
Yeah, I mean, it's definitely possible to start seeing increased yield estimates. Especially with the ultra high crop ratings. I guess what I'd be curious, what they did in the May WASDE is they increased corn demand through exports quite a bit. Was there enough time to consider this 25% tariff on Japan from the economist perspective? We may see them print a much higher 2025 corn carryout because of that, right? They stated earlier in the season that they'd be considering tariffs as part of their estimates. We have to assume that their lofty export demand numbers are going to be written maybe down a bit once they start considering that we're now slapping a tariff on Japan.
Sure. Jace, nice to see we're kind of breaking into some really good demand on corn side. I mean, I guess if you want to whip cream on, what is to call it, but
thank God.
Yeah, no kidding. I looked at that number this morning. I said, well, at least it wasn't bad.
Yeah. Thank
what
God.
What are you thinking about this morning?
No, I agree that good weather forecast is kind of moving rain around here and there, but it's like okay, it's just a wet pattern right now anyway. Like I kind of said yesterday, right? Like bear markets tend not to go straight down; they kind of chop. It feels to be we're a little oversold right now, run into business. I wouldn't be surprised that we have a little bit of short covering rally, and then it fails, and then we kind of grind. Like I said, like this chop sideways to lower pattern is kind of typical this time of year without any threat, without any new information, will likely continue that pattern. I just don't see, you just kind of have to make stuff up right now of what could happen, and the potential for something to happen. Obviously that's out there. It's just kind of boring, I don't know, Dan. I want to be friendly corn. I want to be friendly because it's cheap, but it's hard with this time of year with good weather. That's the only thing you can say about it. So I think if you want to be friendly, it's a timing thing more than a price. I keep telling customers, you really got to be careful with picking a low in these markets and saying this is too cheap. We think this is cheap, but markets can go much lower than they, should. And that's what it feels like, a setup like that, right? Funds are really short. They have no problem staying short, getting short, or really pressing it until it stops working. And that might be well below where it should have ever gone. So I'd just be cautious, right, of picking a low. I think you really got to wait till you get into harvest and, and then kind of pick a spot there if you want to try to re-own some bushels or whatnot.
Sure. I thought it was interesting too. This morning it caught my eye was corn open interest down 21,279. So commitments will be interesting to see where we finish the week out there. And I know we did sense there was some farmers selling in the last couple of days. What another interesting conversation I had with one of our real close friends in the industry was a commercial, and it was that we're not the only ones frustrated, right? I think everybody's frustrated because from like a commercial perspective, the farmer doesn't want to particularly move on anything or do much here because you're kind of in no man's land, and then the end user is they're hand to mouth. And so everybody is just kind of in this blah pattern. And to be quite frank, the markets are acting like everybody's in the blah pattern. There's just nobody willing to.
Yeah, it's a perfect market for end users, right? I mean, they keep getting these great crops and they can kind of hand to mouth. And the longer you wait, the more money you save on not booking it early. And it seems to be cheaper the longer you wait, type of thing. It's eventually going to bite them. It's eventually going to bite these funds too, and these guys that sell really low vol. It seems like the trader 20 years ago would have never taken on these kind of risks in grain markets. And it seems like whatever the large trader is now, they're, I don't know if it's more stock background, institutional kind of traders. These guys seem to be willing to just hammer volatility down and
so we've talked, yeah, and that's a good point because we've talked about that a number of times. Like, is that lack of market participation so that they can just get away with that? I mean, like back in the day, Jace, there'd be guys that would come in there and hold that stuff in line, right? You know, the old guys. But now it just seems like, okay, well, their funds want to get short, they'll get paid, and when it'll be at a time of their choosing. It feels like,
Yeah, I don't know if it's just their larger, the grain position they hold is a smaller portion of their entire portfolio.
Yeah.
And they see, so if you look at the volatility in our markets is much better than in a lot of other markets that they're probably trading. So they can kind of say, well, I can crush this vol over here. If I get caught, what's my risk, right? I got all this other stuff on that it's probably not going to hurt me that much. And so they kind of squeeze it, and it's been working. Like I said, eventually they'll get stuck in that, but not with good weather right now.
I'm waiting for it.
It's working. It's working with good weather. So
Yeah, let's do the them get stuck part because that's just where we're at right now. Ryland, a lot of news overnight. I know there were some rumors, but we finally did get some guidance there from Secretary Rowlands as it pertains to Screwworm. Have to be careful when you say that word. And also wanted to talk to you this morning about these Brazilian tariffs. Going to be big for beef, it feels like. And we're just continuing to roll hogs. So why don't we get your thoughts here this morning?
Yeah, absolutely. I mean, this is one of the rumors that we were talking about the other day, that just kind of hearing through the grapevine, and then it officially got released last night about the pausing of the phase reopening of the Mexican border. So, I mean, obviously somebody knew about this if we were hearing this, a couple days ago. And I think the market has reacted. I mean, that feels like that's why the feeder market has just been a real juggernaut just over the past couple days since we got back from the holidays. So, I mean, there's no question how bullish that is, but on the other hand, it's still one of those things that's going to change. I mean, like, we are going to still see the border reopen. They are taking steps. I think I sent you that article about releasing flies to combat the screwworm situation. So, I mean, there's all things that are in the works, but I mean, obviously, like, the timeline is unknown. If it's going to be a phase reopening next time, it's going to be a full reopening, if there's even going to be an opening at all, or what have you. So yeah, it's just kind of a wait and see. Obviously, we're feeding the bull at every turn. And just like you referenced, the 50% tariff on Brazil. I mean, at this point, Brazil, especially this year, has become our #1 foreign source for beef. So, I mean, like, it's 175 million pounds that were imported just in May alone. So, like, this is how the whole way we were going to kind of get prices to kind of level off down the road were with imports of cattle and with imports of beef. And so far, we have throttled both of those mechanisms in one of the tightest herds we've seen in the U.S. since the 50s. So, I mean, it just kind of, once again, it just continues to feed the bullish mentality longer term down the road. I don't know if we fully priced this in yet. I don't know if anybody could quantify this exactly going all the way out, but I think we've done a good job, and the managed money's still really long this market. There just hasn't been a reason to get out. At this point, you just really haven't taken too much heat. And I think it's just great for the producer. I mean, anybody that was holding off a little bit of fearful that prices were coming down last week, I think the optimism's still there that cash market is going to be up and the Packers are still on the ropes. So right now we're hearing 225 bids getting passed yesterday. And I imagine that, everybody's going to be holding off for, 229, 230 again this week for cash. So we'll see how it shapes up, but no question about it, how friendly all the news has been, outside of the fact beef prices did get hammered yesterday. Choice was down almost $7. Select was down $5, but I'm pretty sure that will get completely swept under the rug today, just with the new news. Now that it's on the wire, but we'll see. I mean, the market already has traded a lot of this, but once again, still things that are kind of evolving, going to take time to see the impacts of, but overall, yeah, that's kind of the state of the cattle market right now, just continuously bullish information. And then hogs, yeah, the roll has taken precedence. Obviously, managed money's moving from July to August and even further out. So at this point, I think everybody's waiting to see if there's going to be a little bit of a seasonal decline here in cash cutout, but really the trade is just kind of flatlined. It's just kind of gotten choppy. We're right around the 50-day moving average, and I think it just kind of holds here until we see some really bad news. Otherwise, once again, you've got a massive managed money long. I imagine the higher beef prices or the higher cattle market is still kind of acting as support for the hogs. So that's not going to change. I don't think anytime soon right now.
So, and we're noticing, a premium starting to be built in the back end of hogs. I mean, are you seeing that as a reflection of how bullish the back end also of cattle are starting to become or have become?
Yeah,
as well?
I do think it's holding up the hog market quite a bit. I mean, like this is the retail margin, I think, overall. And plus, there's been a lot of chatter on how tight supplies really are right now in the hogs. And so, I mean, I just think that if you've got this big discount in the back end of the market versus the front, I mean, at this point, it feels like the longs can just keep on rolling at better and better prices down the road. So that once again, the structure of the market itself, the idea that supplies are going to stay tight and that cattle prices are going to stay elevated for at least the next year, I think this gives a lot of support to the meat and the meat complex in itself. So
very good. Appreciate the update there, Ray. Just came into the open. September corn down 2 1/4 here at 397. August beans are down 4 3/4 at 10.04 is the last, and September Chicago wheat is up 5 1/4 at 5.52 1/4. Again, we will have the USDA crop production and WASDE report out tomorrow morning, 11 o'clock Central. Also, Bry's back. We'll get back to normal here and have some fun fact Friday. I know everybody needs it, so be sure to tune in. You never know what you're going to get there, and I'm sure he's had a lot of time on vacation to think about some really cool fun facts. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. And we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.